It's not what the true cypherpunk crypto people, early stablecoin enthusiasts may have wanted, but
this is also where we kind of thought we could do this episode of slaughtering crypto's holy cows.
I don't think it saves Bitcoin security. That's another sacred cow. Satoshi is this Promethean entity that stole fire from the gods. Satoshi stole central banking from the central bankers. This amazing sacrificial thing. It's a great story. It's one of the best stories of all time.
Nic Carter is a leading voice in the crypto industry, serving as a general partner at Castle Island Ventures.
Known for his insightful analysis and strong advocacy for Bitcoin and stablecoins, he has been influential both through his company's strategic investments in the sector and his contributions to major publications and media.
I keep saying this, even if nothing else in crypto worked or was a success and we just ended with stablecoins, it would have still been a huge contribution to humanity.
If you are honest with yourself, and I think a lot of people kind of are discovering this, I feel like it's just this gigantic, elusive trap that drives modern man crazy, into mental illness.
So there's no sector where retail gets to win forever.
People kind of switch to, okay, Bitcoin is just digital gold. And here I'm even asking myself the question, is it?
So I don't think it's over for Bitcoin.
Good to hear that you haven't given up on this more brighter future just yet. Hey, Nick. Cool to have you here. How are you?
Doing great, man. How are you?
Yes, great as well. Currently in Austria, just spending some time here, doing some sauna sessions and stuff to kind of recover. And how about you?
Yeah, I'm doing the sauna here too. I kind of burned out from all the conference travel, so I'm trying to. I think conference is the worst thing about crypto. So I'm trying to get my health back on track. And I don't know. Are you planning on going to Bangkok?
No, not at all. No, maybe planning to go to Abu Dhabi later this year. We'll see. Not sure about that, but I just returned from Plan B in Switzerland, the conference, because I'm in Switzerland, so it wasn't that much of a hassle, but still, yeah, these conferences, they can really wear you out. And you're speaking at all the conferences and back-to-back meetings and everything, so it must be even harder, I guess.
Yeah, the Asia one was intense, but worth it. I thought it was great.
Yeah.
And we got to hang out.
Yeah, great.
So.
Yeah, cool. Well, probably people, obviously, they all know you. You are a Bitcoin philosopher, hero turned villain, I guess. You are a citizens journalist. Also, you are a semi-professional fighter, even, I would say, nowadays. Stablecoin VC, as far as I know. So is there anything else that comes to mind as well?
One thing people don't know about me is that I am a musician. Actually, I've been a pianist my whole life, and
sure.
I actually wanted to be a professional musician when I was younger. Yeah, and I had to abandon those dreams, and I became a VC instead, which is my greatest regret. So yeah, maybe one day I'll go back to that and start a band.
Yeah, really interesting. So you're a pianist and as well a fighter. This is something which is interesting because I do a lot of sports as well, because I tried the drums once, but it just didn't work out. I feel like I have the athletic gene within me and no music or
Being a drummer, you have to be pretty fit though. You need really good muscular endurance, I think.
Yeah, exactly. Yeah, but no, this one didn't work out for me either. So I also kind of joined crypto instead. Yeah. We also play on the claviatura, as we say, on a few things for sure sometimes, So, yeah, no, cool. Well, you mentioned Asia, that's where we originally met, for the first time, which was very nice to kind of talk to you during lunch. And then we were discussing these, I would say, beliefs, within crypto that are still kind of strongly held, I would say. But if you kind of try to dig deeper, sometimes reality doesn't really match up. So, this is also where we kind of thought we could do this episode of kind of, maybe slaughtering crypto's holy cows, so crypto's holy cows. So, I would like to kick it off. So any special holy cow that comes to mind, when you think of this? Or otherwise, I have a few in mind.
Yeah, there's so many. I think The main one is crypto assets as a medium of exchange, as in non-pegged crypto assets, native, so Bitcoin, Ethereum, etc. I think the data is clearly showing to us that is not the direction of travel here, and I think we have enough track record now. Bitcoin's been out for 15 years. I guess the white paper day anniversary is in 3 days, and this is something I started talking about as early as 2020 when I first collected the data. And, I saw stablecoins breaking in at that point. They had like 30% market share. And over the years, they've grown to 70, 80% market share, maybe a bit less today. I think that's the main one. Like even Satoshi thought Bitcoin would be a medium of exchange and we would follow, Bitcoiners felt that we would follow this SOV, MOE, UOA chronology sequencing, and it just didn't happen. And I think we now have to reckon with the world in which the primary thing that's transmitted on blockchains is tokenized dollars and not the crypto assets themselves. It's a different model of decentralization. It's maybe less subversive than people think, less disruptive perhaps, but I think still a very good outcome. So that's the case that I want to make, I guess, is we're not giving anything up by acknowledging that stablecoins are the main thing that people are going to use to transact. That doesn't mean that we can't have good SOVs in the form of Bitcoin, maybe Ethereum, although I don't know if anyone believes in Ethereum as an SOV anymore. But yeah, that's kind of the main one, and I think people are coming around to that view.
Yeah, that's interesting. I mean, on that point, I feel like I would totally agree, like that Bitcoin, some people are still working on Lightning. Some people are still working on other scaling solutions, and I might want to tackle this a little later as well. But I mean, it doesn't, this MAV, as you said, medium of exchange, it just hasn't worked out so far. And like, for good economic reasons, I would say as well, because Bitcoin, in the end, it's just too volatile and it doesn't help, or it doesn't make sense to kind of spend it either, because like it could be going up, and then also to accept it is also quite a hassle. But the SOV debate, I find also quite interesting, because like then people kind of switch to, okay, Bitcoin is just digital gold. And here I'm even asking myself the question, is it? Like, because I was traveling around like South America, I was traveling around Africa and different places, and there again, except from a few like true Bitcoiners, the things people held as a store of value, it was also stable coins in the end. It was dollars, because, as with a dollar, if you are in, I don't know, Zimbabwe or I don't know, Argentina, like having an exposure to dollar is already that much better. So even on that front, I'm kind of like, I've grown more skeptical.
Yeah, well, I don't know. It's a good question. Obviously, with the launch of the ETFs, it's been spectacularly successful in this country. 20 billion of inflows year one. No ETF launch has ever been that big. So clearly there is some demand to get at least financial exposure to Bitcoin. Where I think this goes is, I don't think it's actually necessarily a one-way trajectory in terms of stable coins eclipsing Bitcoin as SOV, and then Bitcoin becomes relevant over time. I think it's like going to be cyclical, basically. So stablecoins do have this inherent flaw, or like this feature whereby there are access points that can be compromised. There has to be a bank somewhere, there has to be an issuer, the issuer has to hold funds in some respect. And so there will be an interplay between governments and issuers, where the governments pressure the issuers and induce the issuers to reduce the settlement quality of the stablecoin system. So the settlement assurances will be impaired over time as governments become more onerous in terms of their requests. So like you saw, there's a big article on Tether recently in the Wall Street Journal saying, oh, the DOJ is investigating Tether again. Like, this is never going to stop. Any stablecoin that achieves success will be seen as a target by the government. And the natural reaction from the issuers is to protect their business and do what the government says. So you could imagine a world where, okay, Tether freezes how many addresses a year? I don't know, 1,000? Maybe next year it's 10,000. The year after that, it's 100,000, right? So over time the assurances of that system are steadily degraded, at that point, I think there's a reaction where people, start to look for higher quality settlement assurances, and they accept the trade-off with let's say the volatility of Bitcoin. Let's say you're using it for a bridge currency or something like that. You would then move to a different point in the trade-off space between settlement assurances and volatility. So what I think actually happens is you have an explosion of stablecoin use, governments attack the stablecoin space, some fraction of the users of these blockchain-based assets, people that want blockchain-style settlement, then they move back to Bitcoin as the economic substrate. And then maybe things relax a little bit, and over time they move back to stablecoin. So I think it's going to be basically a push and a pull, depending on the relative level of pressure that's exerted on stables. So I don't think it's over for Bitcoin, if that makes sense. I just think that it has been successfully challenged, and right now stablecoins are in the ascendancy.
Mm-hmm. Yeah, that's a great point. I mean, I feel like it can go hand in hand, sort of like in a big picture adoption, and sort of like, yeah, you have like people who are exposed to stablecoin, but then, as you said, as there are attacks, as there are like seizures, as there are like also people who, when they kind of freeze stuff, people might then turn to other things, and it's probably easiest to then turn to Bitcoin, because
right.
You are already on chain. So stablecoin, it's almost like it's sort of a gateway drug to Bitcoin for some, not for everyone. And then again, as things kind of, it's like this economic cycle theory. If everything is hurrah and everything's going well, obviously you're going to be in stable coins. But then, like, if shit hits the fan, then at some point you might be quickly moving back to Bitcoin, and things settle down again. Yeah, we're all back in stable coins. So
yeah,
that certainly makes sense.
So it's like, I see it as like the modern 60-40 portfolio in a sense. Like, why is a 60-40 portfolio good? Because bonds, fixed income, and equities are not perfectly correlated, right? And if equities rally, then in theory you should rebalance into bonds and vice versa. And during a time of panic, what do people do? They buy short-term treasuries. And it's kind of the same, I think, in crypto. It's like, when times are good in crypto, you probably just want the most convenient tool, which is stablecoins. When times are bad, when a stablecoin depegs or there's panic or the issuer is compromised in some way, you'll go back into Bitcoin, or you could just go back into fiat as well. But once you're onboarded onto this sort of crypto infrastructure, you probably don't want to go back into fiat. So Bitcoin is sort of always there as this ever-present economic layer. And I think, when there's significant adversity for the stablecoin sector, which we're not seeing right now, but we probably will see at some point as governments start to grapple with them, I think people flow back into Bitcoin. So it is sort of like constant flow back and forth.
Mm-hmm. Yeah, sure. Exactly. Well said with the 60-40 comparison. I mean, you mentioned this Wall Street Journal report, I think, or article, and I was at Plan B, and the Tether, like the CEO, Paolo, was there as well. And we were actually having dinner that night, when that report hit. And then obviously I think we saw Bitcoin correct like 3% on the news, and he was then like quickly tweeting stuff out and making sure everything is fine, but I feel like obviously Tether is so big nowadays, but it's, as you said, it's a centralized coin. And then again, we have this holy cow, I would say, in crypto, should we look to decentralize stablecoins? That's always been this big like dream, and also then people have been striving for this. But then again, is it good in theory, but in practice, again, like decentralized stablecoins, they will never really latch on? Or what is your belief there?
Yeah, I don't think you're ever going to get a true decentralized stablecoin in the vein of early DAI, which was issued just against ETH. Like, capital efficiency matters, and the one-to-one pegged model is clearly what the market wants. I think the decentralization in practice that we get from stablecoins comes from a variety of issuers in a variety of jurisdictions, and that's happening. I mean, obviously Tether controls about 70% of the market right now, so it's still a highly concentrated market. But as you get more regulators that pass more favorable stablecoin legislation, which we are seeing. You look at Hong Kong, you look at Singapore, look at Bermuda. EU is maybe a little more questionable. It seems like they don't really like stablecoins that much. But as you get more of these regulators that accept stablecoins or accept issuers, you will have a broader set of issuers, and some of which will be more immune to what any one specific government wants, specifically the US government. So that is a form of decentralization. It's not what the, true cypherpunk crypto people, early stablecoin enthusiasts may have wanted, but it's an acceptable outcome, I think. And as I've said before, I think it mirrors the Eurodollar system where people offshore dollars in order to escape from fairly oppressive regulatory demands from the US, and for other reasons like interest rates were capped that could be paid on bank deposits. So people went overseas, and now there's more Eurodollars than there are dollars. So it's always this push and pull where if US regulation gets too onerous, people still want dollars. In the case of the banking system, we wanted dollars in banks. In the case of stablecoins, they want stables. They're going to find places to issue and utilize them. And I think that gets us to a pretty good place. I think the innovation of stablecoins is really underappreciated. As finance has been digitized since the 70s, we have progressively lost any notion of financial privacy through the Bank Secrecy Act, through certain Supreme Court cases, through this thing called the third party doctrine in the US. And it has become an alien concept to have financial privacy because it's so convenient to embed surveillance when finance is digital. And that's been a huge loss for society. Stablecoins are the first time that we have a measure of financial privacy in a digital format for cash-like transactions. And that's a huge accomplishment because stablecoins operate on the blacklist model, right? And so that is a vastly better model than the way things work with the banking system. It is truly cash-like. It's very analogous to how physical cash works. And so I do think that we have achieved something really significant with stablecoins. Even if nothing else, I keep saying this, even if nothing else in crypto worked or was a success and we just ended with stablecoins, it would have still been a huge contribution to humanity.
Mm-hmm. Yeah. I feel the same eventually. Yeah. I mean, you mentioned financial regulation and financial privacy, and so I keep on getting the question, obviously, from people outside, like, is the U.S. government a threat to Tether and stable coins, or is it more like a tailwind? Because as you said, they can kind of look to Tether, apply this blacklisting approach, freeze stuff. Probably even easier nowadays with if things are on chain. So what is your feeling? Because I have a hunch.
Yeah, such an interesting question. I think it depends on the election, frankly. So if, for instance, Kamala wins and they get a strong progressive mandate, then I think they'll continue to be hostile to stablecoins. That doesn't mean they'll necessarily be able to chase down all of the offshore stablecoins, but they will continue to prohibit U.S. banks from issuing them, for instance. This is because progressives don't want there to be transactions that happen outside of the regulated banking apparatus. This is an objective of the progressive agenda, is to have political constraints on who can transact and utilize financial infrastructure to achieve social objectives, right? Social justice goals, whether it's climate or racial equality or whatever it is. That's why progressives will never like stablecoins. If Trump wins, I mean, Howard Lutnick is one of his key advisors. He manages most of Tether's treasuries over at Cantor Fitzgerald. At that point, I think the sky's the limit for stablecoins in the US. But yeah, I do think this point that we've been making in the industry is getting through to Washington on both sides. Stablecoins is good for the dollar. Stablecoins is buyers of the debt, especially at a time when other large buyers are divesting the US debt. And stablecoins as projecting U.S. values and interests throughout the world. That's kind of a new Washington consensus. Like in the past, after World War II, we had Bretton Woods and we set up the IMF and what became the WTO and the UN and the World Bank. And the idea was to project U.S. interests by promoting free markets globally. Stablecoins do this. They project the power and the usefulness of the dollar, the property rights associated with the dollar, and they export that to a global audience. They integrate the global economy. They bring billions of people online that didn't have access to transactional finance in an efficient way. This is why I call stablecoin Starlink for finance. They bring these people online that just were not in any way integrated into the financial system. They make these people economically available for the first time, right? And I think that is good for the U.S. It's good for the world. It's good for these individuals in countries that have unstable banking systems or have deal with ruinous inflation. But it's also exporting U.S. values. So I think folks in Washington are waking up to this on both sides of the aisle, but certainly a Republican win would be more conducive to the growth of the sector.
Yeah, I do feel it. It truly is a win-win, that the thing that you just described in terms of stablecoin, because there was always also this other, again, I could call it holy cow, like banking the unbanked, that's what crypto is about. And obviously, I think that's what we just established, like Bitcoin and the others, they have not achieved that, probably not to a meaningful extent, I would argue. But then like stablecoins, they are probably doing this right now. And then again, I would also argue it's a win-win, because I think you have written this already back in 2020. I had an article saying like back in the day when Libra, was announced, and then there was discussion, is it going to get taken down? I was wrong, but I said like, no, it's not going to be taken down by the US, because in the end, what Libra will do is really, it will kind of channel third world capital into like first world debt, because that's how stablecoins function. And I think back in the day, this was not understood that clearly, but we can see it nowadays with Tether, being this great holder of US Treasury. So there we totally have a win-win, because all these people in the third world are going to be better off by holding stablecoins, and the US at the margin at least, has an additional buyer of its debt, right? So it certainly is a win-win, I would argue.
Yeah, and the one thing that I've heard from smart folks in Washington that know about stablecoins and still don't like them, like Tim Masad wrote this op-ed in Brookings a while back, which I thought was very interesting, is, okay, yeah, like stablecoins are good, they're buys the debt marginally, they're good for, consumer welfare in the global south, but they inhibit the premise is they inhibit our ability to weaponize the dollar for sanctions purposes, which we're still fairly effective at, even though now there is this new axis of commodity exporters, China, India, Iran, obviously Russia and North Korea in that same axis, that have gone around, doing an end around the dollar system. But still, the sanctions and the secondary sanctions are fairly effective, I would argue. The New York node of finance is the most important node. And so there's this view that stablecoins allow sanctions evasion to occur, and the Wall Street Journal writes about this every month, it looks like, and they talk about how stablecoins are used for pig butchering and for all kinds of heinous activities. But my view is stablecoins are fundamentally more legible than interbank transactions, and they are fundamentally easier to intercept if you, as the issuer, are pretty focused on sanctions evading or determining who's using the stablecoin. And you can obviously freeze these things instantaneously at a distance. It's easier to intercept than cash. So my view is that the stablecoin regime still totally comports with the US-based system of sanctions enforcement. So it's not one or the other. Like, you can still have, whether or not you agree with sanctions as an institution, you can still have them under a stablecoins model of international finance. It's just that you probably want the issuers to be a little bit more accountable to the US, which by trying to force stablecoins out, it's counterproductive, because now maybe they're less inclined to listen to you. So I think that's the problem with the way that the US has treated stablecoins so far, is they push them away. What they really should do is fold them in so that they can have much more influence over the issuers.
Yeah, exactly. Yeah, that's what we've seen for sure. That's been a problem all along. Like FTX, was pushed offshore. Even exchanges. If you want to regulate that stuff, it makes a lot more sense to bring it on your home turf. That's for sure. And maybe at some point, we don't know about Tether, but let's see. Because as I said, I was at Plan B, and Paolo were so open, and he was like, yeah, we are collaborating on everything with the US government. That's our duty. And I think, yeah, as I was said, behind closed doors, that's what they have to do. It just doesn't work otherwise,
I have one weird theory about Tether as well. I know people love to have Tether conspiracies. I have nothing against the Tether people, to be clear. I'm like a big time Tether defender. I think part of the reason because most crypto critics have long felt that Tether was the biggest risk to the entire crypto space, right? At this point, I think it's systemic. Like, I think it's too big to fail, so to speak. And it also is used by tens of millions or maybe over 100 million people worldwide. So it's not something that would be trivial to eliminate. It would cause enormous chaos if the government tried to do that. I think part of the reason Tether has gotten a pass, so to speak, in Washington is because a lot of Tether has to do with Chinese offshoring of, let's say, high net worth individual Chinese wealth. And I think it's good for the U.S. It's good for U.S. interests if, wealthy Chinese families are able to offshore their wealth. The reason China wants them to keep it onshore and they have these capital controls is because they want their loyalty. They want them to be invested in the future of the country. They don't want them to leave. They don't want them to have the ability to leave. But I do believe that a significant portion of the Tether market cap is just Chinese wealth that's fleeing China. And that's good for the US. And so as a consequence, I think that's one of the reasons why Tether hasn't faced more scrutiny from the US to date.
Yeah, it's an interesting theory because I heard that as well. Tether was way in 2013. I think it was one of the first use cases of blockchain again, already back then. And nowadays, as you say, if they are fleeing this or like China and bringing this capital outside, where do they go? They put it into U.S. equities, into into the U.S. stock market in the end, and it's obviously net beneficial, I would argue. So that's an interesting theory. If I have this, if I theorize, and I say, okay, stable coins, they're going to outpace Bitcoin in growth, for the foreseeable future, then, and I think I heard you speak about this as well already, like at some point, it could even be that we pay miners in stable coins, if Bitcoin is predominantly transacted on chain, maybe at some day even on Bitcoin, so yeah, will there be native tokens in 10 years from now? That's kind of like my question.
Yeah, I think the Bitcoiners are a little slow to wake up to the importance of stablecoins. And many of the more moderate Bitcoiners have. Some still think it's heresy. There's this like Bitcoin view that all fiat is going to zero. Obviously, that's like a pipe dream. That's false. Some fiats are going to zero. The weakest 20-30% of fiats will go to zero due to stablecoins, and that'll happen in the next decade. That was the subject of my talk at Token. Was trying to guess which countries those are. You can see this happening in real time in Venezuela, Argentina, Nigeria. Not full dollarization yet, but partial dollarization via stablecoins, what I call crypto dollarization. Bitcoiners, they didn't yet find a way to synergize stablecoin usage in Bitcoin. Really, the only blockchain that has done so is Tron, arguably. Like Tron, now benefits, save a lot of fees from stablecoin usage. Even Ethereum, they have had an uneasy relationship with stablecoins. Part of the Ethereum idea was Ether as the collateral for smart contracts and things like that. Now, of course, Ether holders benefit from fees paid, for usage of the Ethereum system. So maybe there is some more synergy there. With Bitcoin, who knows which L2s are going to win, but certainly there will be stablecoins on the new L2s. There's also stablecoins that are issued against Bitcoin, like Athena is issued against Bitcoin and Ether collateral. It's a long spot position paired with a short futures position. You collect the basis. But that's a delta neutral position, so that's not directionally long Bitcoin because the long is paired off against a short. So that doesn't actually really benefit Bitcoin. Will stablecoin usage on Bitcoin be good for the miners? Will it be good for security? It's hard to tell. I think it's kind of a myth that Bitcoin fees are going to be at sustained high plateau. We've never seen that. It's always cyclical. Bitcoin fees spike for short periods of time and then come back down. So for stablecoins, it seems to be a race to the bottom. Like, people don't really care where the stablecoins are transacting, so it'll just go to whatever the cheapest, most abundant block space is. So I don't see stablecoins as the thing that saves Bitcoin security per se. But I do think there will be stablecoins on Bitcoin. And I totally agree that we will have this fee abstraction occur, and miners will eventually be paid in stables, in part at least. And that can happen today, by the way. You can just pay miners out of band to mine your transactions. You can email them, the transaction bundle, and you can just send them an out of band payment. I think most mining pools accept this now. So that could well be the way this goes. I don't think it saves Bitcoin security. That's another sacred cow maybe to analyze. But that'll definitely be a feature of Bitcoin.
Mm-hmm. Yeah, I mean, that's interesting. Yeah, for sure. I mean, yeah, you mentioned these layer 2s as well, and stablecoins, because something else that comes to mind is really, again, in Lugano, there are all these Bitcoin maxis, and then like Tether nowadays is really running the show, and that's kind of like the contradiction, so to say. And then people obviously point this out as well, stablecoin Tether is like, it's all on Tron and Ethereum mostly. And when is it moving over to Bitcoin? That's what these people were asked as well. And then they obviously, being in close conjunction with Blockstream, I think they have been pointing out Liquid, as a sort of solution that could host these stable coins. So my question is, intellectually, again, I would find it interesting if stablecoin were to move onto Bitcoin, and at some point on all different layers, and we have an entire like fiat denominated financial system happening on Bitcoin, and Bitcoin is the rails. And I think even Elizabeth Stark, she's still saying Lightning can kind of or Bitcoin and Lightning can dollarize or Bitcoinize the dollar, so again, here, what do you make of these theories? Has the boat sailed and it's never going to happen, or is it just going to take 10 to 20 years?
Yeah, I mean, the Lightning ship has sailed, in my opinion. We've been working on Lightning since 2017. A lot of capital has been thrown at it. Lots of founders have tried to build businesses on it, and it hasn't reached escape velocity. Lightning is ultimately too complex. The UX is too complicated, and it's just not that capital efficient in terms of needing to collateralize channels. So I don't think that's the, scaling solution that'll take Bitcoin to the promised land. I think rollups are fundamentally more efficient and overall easier. I hope that we can use something like BitVM v2 to inculcate a rollup environment on Bitcoin, whether it's ZK or optimistic. And I do think there will be stablecoins on those rollups once they launch. But I do want to interrogate the premise that stablecoins are just inevitably going to find their way back to Bitcoin. I know a lot of Bitcoiners think this because a lot of them say, well, Lightning is cheaper and more efficient than these L1s that like Solana or whoever. That's not the whole story. It's not just about fees. Like, the world, entrepreneurs will find a way to produce huge amounts of block space at a very low cost. And today, that's something like a Solana, right? Or any of these next generation L1s, or some of these L2s that already exist. So if you're competing on cost, it's not going to be Lightning or Bitcoin. If you're talking about infrastructure, like the developer environment, how easy it is to spin up a business, and the tooling that exists already, like, again, that's probably Ethereum or Solana, right? So Bitcoin is really behind when it comes to that. So I have a hard time seeing a meaningful share of stablecoins move over. Things like network effects really matter. Like, why is Tron so big? Why is Tether on Tron so big? It's because I think for a while Binance had free cash outs to Tether on Tron, and people got stuck with that infrastructure and they just stayed with it. So it's stuff like that that really matters, is network effects, infrastructure, and people will learn how to use one rail and then just keep using that one. So I think it's going to be really hard for Bitcoin to break into it. Doesn't mean it's the end of the road for Bitcoin by any means. But I think if people think, stablecoins are going to come to Bitcoin just for Lightning on a cost basis, I think they're going to be disappointed.
Mm-hmm. Yeah, interesting. I mean, I already asked you this in Singapore, but then because I believe you are still with Castle Venture Island, an investor in some of the Bitcoin layers, and if it's not stable coins that is going to move there, what's going to happen on these layers, and why are you still invested?
Yeah, I mean, we're very actively investing in Bitcoin L2s. It's not a stablecoin thesis. We have a separate stablecoin thesis. The reason we invest in the L2s is because we think they're, ultimately a better way to utilize Bitcoin, and we think there's great infrastructures that were developed mainly on Ethereum that can now be ported over to Bitcoin. And my hope would be that we could have a richer transactional environment on Bitcoin, achieve rich statefulness, and make it better to use overall, and bring Bitcoin more into convergence with the rest of the crypto space. But the theory behind what people use it for is more to do with DeFi, which does require stablecoins. But it's not a stablecoin theory. It's that we think that this kind of transition, this infrastructure is necessary. And we are, ambiguous. We're open-minded to what people will do on the L2s. But we think there's a lot of idle capital in Bitcoin. There's like $1 trillion of Bitcoins that are just sitting around not being utilized. And it's time that we gave people the tools to do more with them, basically.
Mm-hmm. Yeah, I keep on hearing this argument a lot. Like, there's a lot of capital, like idle capital on Bitcoin, trillions, I would say. But the thing that I'm asking myself then, and this may be shifting gears a little, to crypto, and then like the use cases that crypto, besides like stable coins, has come up with so far. I feel like the most compelling one is really like this global altcoin casino, that you have pointed it out as well, I think back in the days already, that this is something that will drive adoption sort of, and it has, but nowadays I feel like also the degens, they kind of embrace this theory, financial nihilism is really the talk of the day. So the question to me is then like, maybe we can tap into this capital with Bitcoin and then have another like meme cycle and financial nihilism cycle, on Bitcoin. But is it worth it? Is it positive after all? And just kind of what are your thoughts there?
Yeah, I mean, I've been fighting with the meme coin enthusiasts recently on Twitter. They think that there's this meme coin versus venture capital sort of bivalence, which is silly because VCs are very active in meme coins, both in terms of, creating them, funding them, profiting from them, right? So there's no distinction there. People are upset that there have been all these VC-backed coins, which retail can't make money on, which I understand. But meme coins are the same. Like, people will find ways. There's not transparency around who is creating the meme coins, who's getting the early allocation or anything like that. So they'll be just as extractive as any other altcoin until you have some kind of rules around disclosure for creating new crypto assets. That's going to continue to be the case. So people think the meme coin meta is fairer for retail. I don't really think that's true. It somehow presumes that the people creating meme coins are doing it out of the goodness of their hearts. I don't think that's true at all. But yeah, meme coins is not something that we can eliminate. Dogecoin was created in 2014, I think. It was one of the first things I did was mine it on my gaming rig, and tip people with Dogecoin back on Reddit. I thought it was really, I don't know if that tip bot still exists, but I thought it was funny, and I didn't think much of it. And today now you have meme coins in the tens of billions. You're never going to be able to stamp it out. It is, it's like a dry run for the infrastructure. It's, people globally like to trade on these things, and you're not going to be able to inhibit it. But, I guess the hope would be that one day we could use this infrastructure to trade more compelling products, like tokens that have cash flows and genuine governance rights. And you could have like these tokens could come to resemble pseudo equity, and you could have disclosure around them. And it would be like a global stock market, like a single integrated global stock market that's available to retail. So I guess that's my optimistic view, is what we're doing with meme coins now. In the future, that could be put to use for, actual capital formation and funneling liquidity to sort of real projects that need it. But yeah, for now, it is all very nihilistic.
Mm. Yeah, but good to hear that you haven't given up on this more brighter future just yet. So that's certainly good. I mean, Dogecoin that you brought up, I think this is quite interesting, because nowadays, I work at the bank, and we have been considering like investing just a small part into Doge, kind of as a good story to tell, and you can kind of ride the meme coin cycle. So it's actually crazy, but I feel like Doge has reached or kind of escape velocity in a sense. It is a meme. It has nothing. There's no real stuff happening there, but it feels like it can go down, and at some point, technical traders think like, okay, there's a bottom reached, and then if you invest, then it can go up again. I feel like it's just as Bitcoin. I mean, Dogecoin is here to stay, and then then the entire meme coin cycle, that everyone is speaking of, and I feel like that's I'm not sure about that. People say, as you said, the meme coin meta. So we will have a meme coin cycle because it finally dawned on people that it's just meme, which are important. But I feel it's just this bull run's pep talk, and Murat did a great job, like putting this into the minds of everyone. But maybe next cycle, it's just going to be just another fad like NFTs, and nobody's going to really talk about it anymore in that amplitude as it is today talked about,
Yeah, I mean, I think the grievances of the folks that support meme coins are real. Like, it is true that, a huge amount of capital has been funneled into crypto, and for a lot of these new launches, whatever it is, Eigenlayer or Barachain, like, I'm not picking on them, but, these new highly touted launches, the first chance for retail to buy them is at a relatively high valuation. And the airdrop meta has also collapsed because industrial airdrop farmers emerged, and then the projects had to become very careful with Sybil resistance around the airdrops, and so now the airdrop rewards are less and less. I mean, airdrops as a concept were kind of incoherent. There was always going to be this arms race anyway. Like, if you're giving something away for free that's worth something, people are going to do work to get more of that thing. And so it became this kind of shadow proof of work thing. And obviously the industrial airdrop farmers ruined it for everyone. So now that the airdrops are over, you're left with these expensive launches in the billions of dollars. So retail's not happy about that. But, I don't know. It's like a cruel world. Retail may not be happy that they can't buy seed stage equity for companies that later go public. I think I could probably actually defend the existence of the accredited investor rules, personally. If your premise behind meme coins is that it's always going to be this asset class where retail can freely invest at sub-million FDV and ride it up for 100x or 1000x, that's just a false premise, because eventually, people will adapt and they will collude with the launches of meme coins, and the first chance that any outsider has to buy it will be at 100 million FDV, and then it'll be at 1 billion FDV, right? So there's no infrastructure in place that mandates that meme coins be launched at an extremely cheap level. So it is totally a zero-sum game. Obviously, it's just like a form of gambling. Institutional capital will adapt, and meme coins will ultimately, the value will be extracted from them the same way that the value is extracted from these highly touted L1 launches. So there's no sector where like retail like gets to win forever. That's kind of just a pipe dream. And so if you're premising your meme coin case on that, you're just going to be disappointed. There's nothing that also mandates that we have a meme coin cycle. There's nothing that mandates that there's any crypto cycle. Like we could just have a period of slow growth, slow growth and development. Just because there have been cycles in the past doesn't mean that we're necessarily in a cycle right now. I don't really buy the arguments promoted by the meme coin promoters.
Yeah, sure. No, that's actually a good segue also to the last holy crypto cow I would like to address, and it's the one of crypto being a freedom technology, So you mentioned retailers, they can, for the first time they could kind of front run institutionals in some areas at least, and at some point in time maybe also. And you have it. It's just out there. Everyone can invest, and then it's kind of like everyone against everyone. To quote Hobbes here, maybe. But then I feel like nowadays is it really like a freedom technology? Because obviously you can do all these things, and it's permissionless, and you as I said, you don't need to ask anybody's permission, but then still. Like if you are honest with yourself, and I think a lot of people kind of are discovering this, I feel like it's just this gigantic elusive trap that drives modern man crazy, into mental illness and like constant PTSD, and work overload. So I don't know. You told me you have been thinking about this as well. So what are your thoughts?
Yeah, I think when we take stock of the crypto space, there's been a huge amount of malinvestment, probably on the order of tens or hundreds of billions that went into things that didn't work. Like a lot of DeFi didn't work. The premise of truly unregulated, complex finance. I don't know if ultimately the world needs or wants that. And, I think that was poisoned by the desire for people to issue tokens. And so that kind of ruined it a little bit. And then ultimately, there's something about DeFi that probably does require some element of permissioning. You don't really want to put your money into a pool that maybe North Korea owns part of. So, I think we had a reckoning for DeFi for sure. Stablecoins, I do think, are unambiguously a huge success and create an enormous value for the world, both in terms of like investment value, there's going to be huge winners in the stablecoin sector, and then also consumer value, which is not captured by investors, but is actually just value that consumers achieve in the form of efficiencies and reduced fees. Then, Bitcoin, I think, has also been a success, and, critics will call it a zero-sum game, but it's clearly like actually delivering value to people. So I think that one's been a success. In terms of Ethereum and Solana and all of the other L1s, like they are all competing with each other like crabs in a bucket, and there'll probably be a race to the bottom there. I guess the problem is that if the fundamental heresy of creating a new L1 relative to Bitcoin and thinking it was better, it means that there's always someone new that can come along and say that their thing is better than you. So it's like the Protestant religion, it's like, okay, we're splitting off from the Catholic Church. Okay, fine, but we're going to split off from you now. And then you have this unlimited fragmentation. It's not a good outcome. You have like enormously fragmented liquidity on all these blockchains. And it is a race to the bottom in terms of creating more abundant block space and lower fees and more marketing spend. So I think that whole sector of the alternative L1s is just going to go through the meat grinder. I think it will create a lot of consumer value in terms of cheap block space, but it's not clear what enduring financial value it creates. But overall, like I think the verdict is mainly thanks to stablecoins, crypto has been enormously successful, and I continue to be super energized by it. It's just that a lot of the subsectors within crypto were total failures. But that's okay. That was the cost of success.
Yeah, very interesting. I mean, the thing that you said about the Protestant, and the religion, I mean, there also, I think we've already seen this way back in time, like with the printing press, this new technology which was invented, and then obviously the kind of Protestantism was well advanced by this, because Luther could all of a sudden like spread the word, but what it also did, it was kind of decentralizing religion, because at some point everyone could write these pamphlets and letters, and then all these different religions and denominations popped up, and they kept on fighting, and in the end it diluted the entire story of Christianity, so to say. And a few things have stuck around, like Catholics and Protestant and some others, but I feel like we see the same thing here. Bitcoin was like sort of this printing press technology moment, and then now we have all these different tokens, and this is also kind of what gives me hope, that it is sort of this number go up religion and drives in people, because I think you are a Christian, I'm a Christian, I see all these parallels, between these two worlds. You have tithing, and in Bitcoin you have buy the freaking dip, and you have like these cult leaders, in both worlds, and yeah, you know exactly who your enemies are. And so I feel like, I mean, almost maybe the last question just quickly is really, I feel like Bitcoin and crypto could almost seem like this secular religion, that's kind of filling a vacuum, a spiritual vacuum, and that could be in the end still something that drives adoption, because religion has as well. Christianity is a great success if you look at it over a huge and long time span. So the same could maybe happen here with Bitcoin if the world is still around in 300 years or something.
Yeah, no, you're right. It is definitely a secular religion. Certainly Bitcoin is. No matter how you draw there's many secular religions in the world today. There's people that are worried about climate. They think that the climate apocalypse is coming and we have to repent, and we've sinned by having the Industrial Revolution, and we have to live this life of stricture and asceticism in order to atone for the sin of emitting carbon dioxide. And then you have wokeism is a religion, a secular religion. It's the original sin is whiteness or privilege or whatever it is, and we have to atone by reading the racial justice literature and whatever it is, embracing DEI, and so like these things give us meaning. If you create a God-shaped hole in people's lives, they'll fill it with something. And some of these secular religions are more destructive than others. I think the Bitcoin religion is fine. I personally think it's idolatry. I think it's sacrilegious. I think there's one true religion, which is the church, and that provides genuine meaning and direction to people, and real spiritual guidance, and is actually an enormous force for good in the world. And I happen to think it's true as well. The Bitcoin religion, I think, is a perversion of that, which is why I've spoken out against it many times, in my schism with the Bitcoiners. And I wrote an article a while back saying, well, I'm not a Bitcoin maximalist or something like that. And, I was probably guilty of using religious imagery to talk about Bitcoin in the past, and I regret that. I regret encouraging anyone to see Bitcoin as anything more than it is, which is a technology and a tool. But, this is just the way the world is. Like, you have now a religion around AI, which is AI safety. Like, people think that they're summoning a godlike creature into existence, this AI golem that's going to achieve superintelligence and either kill us all, or we'll be able to, meld our brains with the AI and achieve singularity and achieve immortality, right? It's certainly a secular religion. There's eschatology overtone to it, as there is with climate too. And so you really can't stop people. This is like, humans are hardwired to believe in the supernatural. But I don't think we should convert Bitcoin into religion, no matter, even if it's, instrumentally good for us Bitcoiners. I don't think we should do it. I think we should be sanguine about what Bitcoin is. It's a tool. It's a useful tool. It's obviously has a lot of mythology. Like, Satoshi is this Promethean entity that stole fire from the gods. Satoshi stole central banking from the central bankers, right? It's this amazing sacrificial thing. It's a great story. It's one of the best stories of all time, but it makes no metaphysical claims, no ontological claims. It's not going to bring us salvation, or we have to do that ourselves. So I totally acknowledge that it's a secular religion. I don't think it should be.
No, for sure. Yeah. Thanks for being so honest. It's interesting. Yeah, I mean, just to finish up for the curious listener, because there is this really interesting book, by it's a German, I think, political scientist, Erich Voegelin, and he wrote this really complicated book, The New Science of Politics, and where he exactly talks about what you just talked about, the immanentizing of the eschaton, where he basically says that like all the great political movements, like all socialism, everything, as you said, veganism nowadays, longevity, AI, everything, it's just one big attempt to kind of bring heaven down to earth and have maybe salvation already on earth and not just only in the afterlife. So for everyone that's interested, he just makes a great job of laying this out, and in that way you can understand the world certainly a little better. But Nic, thanks a lot for taking the time. It was very interesting. Great. Just a pleasure to talk to you. I could keep on going on, but I think you have other things to do. So maybe my last question, just quickly. So would you know of any other high signal person that we should bring on the pod and that you've spoken to just lately?
Eric Wall. I like Eric. I don't know if you talked to him. Udi would be good as well.
Cool. I haven't.
Would be good.
Sure. No, great. So maybe at some point, Eric would be nice. I mean, he's always nicely dressed on all these events. Even in Singapore, he was also quite exquisitely dressed.
If we want to slaughter sacred cows, that's his mission too.
Exactly. We could continue this with him as well. Great, Nic. Thanks a lot. Have a great one, and hope to see you anytime soon again.
We'll talk soon.
Man, be blessed. Bye.